Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, May 2nd. Hope you guys enjoying the day so far. We got a few economic news to go over, so we'll just kind of jump right into it. We'll start with day two of the jobs data that we'll receive this week. So today we got the weekly jobless claims. Then the last day, tomorrow, Friday, will be the Bureau of Labor Statistics data for the month of April, the jobs numbers. So we'll have the unemployment rate, new jobs created, stuff like that will be released tomorrow. So last week we had 230,000 people apply for unemployment. Forecast was supposed to dip down a little bit to 215. This week it came in at pretty much another 230,000 people applying for unemployment again. So it kind of went sideways pattern here. Again, we'll kind of have to watch to see if this is something that's going to be a trend. If we hit the bottom, now we're trending upwards or more people are applying for unemployment, or if this is something that's just temporary and we start seeing that drop, continue to drop. So again, this is definitely data we want to watch, because if we've already hit the bottom and we see this steadily increasing, that probably will give us indication that a recession will be up ahead, because typically when businesses slow down, the first thing they do is start cutting jobs, and that's something we'll have to kind of keep our eyes on. We also got productivity for Q1. The previous came in at 1.3%. Forecast was calling for Q1 at 2.9%, and it came in a pretty whopping 3.6%. So that probably helped with the high GDP number that we had in there. Productivity, obviously, very good number there from what we see here. We also got unit labor costs for the Q1. So the previous one in December of Q4 was at 2.5% increase. Now, however, in Q1, it looked like forecast was calling for a dip of a drop of 0.2%, and it dropped a little bit further at 0.9%. And a lot of that has to do with could be an indication that wage inflation may not be as much of a factor. So wages do factor quite a bit in terms of unit labor costs, and maybe we did see a dip in the income as we saw this week. So that may have helped this indicator here. Last but not least, we got factory orders showing an improvement here. So in February, it dipped 0.3%. However, in March, it rebounded with a forecast come for 1.7, and actually rebounded a little bit further than that at 1.9% increase in factory orders. So a good number right there. Overall, good news for the economy here. And good economic data what we're showing right here. However, the stock market is negative. It did start off all in positive territory. All three indexes were up. It was kind of shrugging off some comments. We had the FOMC meeting. After the FOMC meeting turned in, it basically turned sour. They didn't really like the Fed's reasoning. They're basically saying inflation is transitory, that we have the lower inflation that's transitory, meaning that it's going to be temporary. They also kind of didn't give any indication of any. They basically stated that the next rate movement may not even be a cut. So that kind of they didn't like that as much, because the polls were out there that it was about 60% that there might be another rate cut by end of this year. That now dropped down to about just under 50-50 chance of that happening. So they didn't like that as much. We're still getting Q1 corporate earnings. No one's really standing out today so far. And then we also got the China talks going on. That there's reports that they're very close now, that we could be having an announced agreement maybe by next week. There are still a few areas that they're gaps a little bit. There's a few gaps in the talks, but they seem to be trying to iron those things out and trying to reach a compromise. Let's see how this is affecting the bond market. Bond market is right now down about 8 basis points. We were down further when the market was up higher, since we pulled back a little bit down 8 basis points. So we'll have to kind of watch to see how this trends, but so far it's not really making it's not enough to change interest rates, because we had a couple of days we're up a little bit and now we're down, so we're kind of still going that sideways pattern here. So it's not enough to make any change in the mortgage rates. So again, mortgage rates will be unchanged today. And here's a kind of look at the 10-year Treasury. So we did see this dip down to about 2.48 yesterday. Now this has kind of come back up to 2.52. So as you can see, the 10-year Treasury has been kind of going a bit of a sideways pattern, but also kind of keeping, when it goes up to this level, is kind of putting a lid on the mortgage-backed securities as well. All right. So again, another day of no unchanged for mortgage back for interest rates, and you guys enjoy the rest of your day. Thanks so much for watching. We'll look forward to see you guys tomorrow, and remember tomorrow will be the big day for the Bureau of Labor Statistics jobs numbers. Have a great day. Bye bye.